everyone. Good morning, good afternoon, wherever you might be dialing in from around the world. Thank you all for joining us for today's webinar, Banking After SVB, Initial Implications for the Short and Long Term. I'm Michaela Bernier, and I'll be your host for today's webinar. Before we begin, let me just cover a few quick housekeeping items. Today's webinar will be recorded, and a link to view the recording on demand will be available after the session. Please feel free to submit any questions you have using the questions feature located in the GoToWebinar toolbar to the right of your screen, or you may unmute yourselves to ask a question at the end of the session. I'll now turn the mic over to Giles to introduce himself and lead us into today's content. Thank you again for joining us, and we hope you enjoyed today's webinar.
Thanks, Michaela. Hi, everyone. So I'm Giles Eubags. I'm a strategic advisor on the commercial banking and payments team here at IT Noverica Group. Thanks for dialing in today. We'll be talking about banking after SVB, initial implications for the short and long term after what we're now starting to call the regional banking crisis of March 2023. So I am, your primary presenter here today. I do just want to point out I am by no means the only analyst who's had any input into everything we're going to discuss. Given the topicality of of everything that's occurred, this is probably one of the more peer-reviewed pieces of research I've ever undertaken during my time at IT Noverica Group. We had lots of discussions internally, both across teams within the commercial banking team, as well as with a number of our clients, both at a banking level and a vendor level, really to gauge perceptions of what's going on out there, what are the implications, where do we go from here. The intention of today is by no means to give a full kind of analysis of everything that's occurred, why it happened, what's the most likely steps to prevent these sorts of things from happening again. It's really more of a snapshot look, right? Things are moving very quickly. Where can they go from here? However, we do think there are implications that are likely to come true, things that, steps that the market as a whole, both at a bank level, a vendor level, an investor level, really need to take on board and need to be reactive to sooner rather than later. So saying that, let's perhaps just dive right into it. So, today we're going to look a little bit at the context of what happens, right? We're not going to go that deep into the underlying causes. I do think that's something people will be fighting over for a long time to come. However, we will be looking at a combination of short, medium, and long-term implications. Right? As I mentioned, that things that people really need to be aware of, need to keep their eyes on in terms of how the market adapts and evolves, because really this was quite a climactic event. And of course, we'll finish off with a few final thoughts. So firstly, context. Where are we? How did we get here? Why has this happened? What's really why is probably the big question here. And the short answer is, there's multiple factors. Lots of factors have brought us to where we are today. The dust still has yet to settle. I mean, things move seemingly faster than ever these days when it comes to news and developments, from politics through to financial services. We're little further than 6 weeks out from the failure of SVB and all the other regional banks which run into crisis. But there are a few underlying factors that I think are worth pointing out. Firstly, you had very much a sugar rush within the markets following the pandemic. Hyper low interest rates. Kind of a huge increase in investor activity into the tech startup space in general. Just a very strong financial economic environment. Combine that suddenly with rising inflation and in turn rising interest rates. The cost of cash was suddenly not as cheap as it once was. Meanwhile, we'll get into this in just a moment. For many fintechs, their cash runways started to decline. Once a few banks started to have a few wobbles, really much of what we saw was a pretty classic bank run. Kind of a bit of panicked rumor mongering, whatever you want to call it. Which again, we'll get into this in just a few minutes. But it's very much that traditional question, that traditional challenge of a liquidity crisis brought on by a bank run. And of course, regulators are still being very proactive here. The FDIC, has stepped in. The market does appear to be stable for the time being, even if the full regulatory environment, it's a little unclear. Which way is this going to go? What are the longer term implications? We're kind of in a bit of an interesting situation where things are kind of said, but not necessarily in a concrete, formalized way, right? It's more of a broader market understanding rather than an underlining, right? To kind of really fine tune very specifically in terms of what all these implications mean.